All right, let's jump right in. If you've poured your heart and soul into building a business here in the UK, then you have to know about inheritance tax. In just the next few minutes, we're going to break down exactly how it can affect the legacy you've worked so hard for and what you can actually do about it.
And you know what? It really can. You've built something valuable, something you want to pass on. And the idea that a huge chunk of that could just vanish in taxes, well, that's a massive concern for so many business owners. This isn't just about money. It's about securing the future you've always pictured.
And the numbers can be absolutely staggering. £800,000. Just let that sink in for a second. That is the potential tax bill on a £2 million company if it doesn't qualify for tax relief. A bill that could literally force your family to sell the very business you wanted them to have.
So what is this thing we're actually talking about? Well, inheritance tax, or IHT, is basically a tax on your estate after you pass away. The standard rate is a whopping 40% on anything over a £325,000 threshold. And for a business owner like you, your company shares are a huge part of that estate.
Okay, so that brings us to our first section, the inheritance tax challenge. I want you to think of this not just as some boring tax, but as a direct challenge to your business legacy. It's kind of like the dragon you need to slay to protect your kingdom.
So how do you slay that dragon? Well, in Section 2, we're going to talk about the key, and it's called business relief. Think of this as your magic shield, all right? It's the main tool that can protect your company from the full force of IHT.
To put it simply, business relief, or BR as it's often called, is a special tax break. It's designed specifically to help trading businesses get passed down through the generations without having to be sold off just to pay a massive tax bill. It can slash the value of your business for tax purposes, sometimes all the way down to zero.
Now here's where it gets really interesting. This magic shield has two levels of power. You can get 100% relief. We're talking total protection for things like shares in an unlisted trading company. But you only get 50% relief for other things, like shares that give you control of a listed company or for land and buildings you might personally own but that the business uses. The big takeaway here? Not all your business assets are treated the same, not even close.
And, like any magic shield, this one has its weaknesses. You can't claim business relief if your company is mainly an investment business, like say it just holds a bunch of properties. It has to be a genuine active trading business. Oh, and you also have to have owned the shares for at least 2 years. These are the kinds of traps you really need to be aware of.
So, just when you think you've got the rules figured out, they change. Section 3 introduces a major plot twist that's creating a whole new sense of urgency for business owners. It's the new £1 million cap.
Just look at this timeline. Right now, a qualifying business gets unlimited 100% relief. It's fantastic. But from April 2026, that 100% relief is going to be capped at £1 million. Your magic shield is about to get a whole lot smaller.
And what happens to the value of your business above that £1 million cap? Well, the relief plummets to just 50%. When you crunch the numbers, this creates a new effective 20% inheritance tax rate on the part of your business valued over $1 million. For a lot of successful companies out there, this is basically a brand new tax.
And this table right here shows you the real-world impact, plain and simple. Let's take a company worth £1.5 million. Before April 2026, the potential IHT bill is a big fat zero. Perfect. But after that date, look what happens. The first million is covered, sure, but the leftover $500,000 is only 50% covered. This leaves £250,000 exposed to tax, creating a potential $100,000 tax bill literally out of thin air.
Okay, so that's the challenge. And that brings us to Section 4, your IHT game plan. We're going to shift gears now from just understanding the problem to actually taking action. It's time to get your defenses ready.
So what's your first move? You need to figure out where your company stands right now, and this is a great little checklist to do that. First, are you a trading business? Second, have you owned the shares long enough? Third, and this is a big one, get a proper professional valuation. Don't guess. And finally, go back and double-check your activities against those exclusions we talked about.
Let's make this real. Meet Sarah. She owns a catering company worth about £1.8 million. And like a lot of people, she just assumed business relief meant she was totally covered. Zero IHT. But when she found out about this new cap, she was suddenly looking at a potential bill of £160,000. But the story doesn't end there.
Sarah took action. This chart shows her journey perfectly. She went from that huge potential liability of £160,000 all the way down to zero. So how did she do it? Well, she used smart, proactive planning, like putting some of her shares into a trust. And with that one move, she was able to completely wipe out that future tax bill.
And what Sarah did is just one of many options. As you can see here, there are other powerful tools in the toolbox. You could place shares in what's called a discretionary trust, you could use your annual gifting allowance, or you could even make extra pension contributions. Now, each one has its own rules, but the key takeaway here is you've got options.
And that all leads us right to our final section, securing your legacy. We've looked at the challenge, we understand our shield, and we've talked about how to prepare a defense.
So here's the bottom line. Yes, the rules are changing, and for a lot of business owners, things are getting tougher. But this threat of inheritance tax is not something you have to just accept. With the right knowledge and a plan that you put in place now, you absolutely have the power to protect the business you've worked so hard to build.
Which leaves us with one last thought. Your business isn't just an asset on a spreadsheet, is it? It's your legacy. So now that you know what's coming, now that you know what tools are out there, what's your next move?